now tuned in to another episode of Juicy Gems, your go-to podcast for everything related to the world of stocks. Discover new trade ideas, current stock market trends, and option trading tips, exclusive interviews with other successful traders, and so much more. Let's go! Welcome to Juicy Gems. Now with your host, Xavier the Master Trader.
What's going on, and welcome back to another episode of Juicy Gems. I'm your host, Xavier, also known as the Master Trader. I'm a 10-year trading veteran with 8 back-to-back green years, now the leader, commander of Juicy Trades. Now, guys, we were on Spotify and a bunch of other places going forward with the Juicy Gems podcast. We're going to put everything on YouTube just to make it simple, and then we'll link these links over to Spotify. This allows me to record in certain places like Twitter Spaces. Now, we just did a Twitter Space going over trading psychology. So what we're going to do is add that Twitter Space to this particular recording. And in 2 seconds, you guys are going to hear, it's going to pick right up into the Twitter Space. Now, sit back and enjoy as I break down some key concepts that you really need to hear and incorporate in your trading psychology. Thank you guys for your support. And here's the tape. So we're going to start off with the things you shouldn't do. Then we're going to lead into the things that you should do. All right. So let's go ahead and dive right into it. So my 10 deadly sins is going to start with number 1. First things first, don't be trying to trade without any form of a setup. You guys hear me say no setup, no trade. That's my logan. That's my slogan, and it's there for a reason. Like every time I get into a trade, it's a process thing. I've already calculated the risk. I've already calculated where I'm going to get in. I've already calculated where I'm going to get out. I don't do none of that on the fly stuff anymore. I used to at the beginning of my trading career, and I've had success with that, but I was not able to achieve consistency because I was just doing everything on the fly. So for me, no setup, no trade basically means come to the market with a plan. And if it's outside of that plan, you never, ever go ahead and get into that trade. Number 2, my second deadly sin, stop trading without a stop loss, right? Some people say they have a stop loss on a trade. They don't really have a stop. And then some people don't even trade without a stop loss, and they are successful. But that is the very, 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 very few, the minimum. Okay, that's never really the majority. The majority of people cannot trade without a stop loss and be successful because everybody focuses on the gains and how much you make, but we never really focus on how much you keep, right? So if you can go back to your trading plan or through your trading journal last year, and you could just literally say, every loss I take, I've taken last year, let me change that loss to 10%. If you could do that, see how much more profitable you'll be, right? Because these stop losses is what keeps you in the game. In order for you to thrive, you have to learn how to survive, okay? And a lot of people, they come in trying to thrive without being able to survive, and therefore they are almost always automatically blow themselves up. Number 3, never average down. I mean, me personally, even when I swing, I don't average down at all. Me averaging down just would never happen. Averaging down is buying more to bring that average price up to get you either out faster or you think it's going to go back higher or bounce dip. No, me personally, I'm the opposite. The faster I can get out of a losing trade, the faster I can find a winning trade, and I can eliminate the opportunity cost, okay? Number 4, this is probably one of the biggest ones, is to never really ever compare yourself as a trader to other traders, right? What do I mean by that? So you don't know what other people are going through trading wise. You don't know what other people's journey was trading wise. You don't know how long it took them to get to where they're at trading wise. As long as you're successful in trading, and what is success in trading is just consistency. Bro, if you can consistently give me 20%, you can compound. There's so many people that come up to me, is like, yo, you know what? I made $500 today. I only made $500 a day. What are you talking about? You only made $500 a day. $500 a day every day for the trading year is about $126,000. I know I have a troll in here that might add that up and it come at me crazy for the math. But if you run the math, it's roughly around $126K a year. And the majority of people don't even make that from a salary standpoint. So if you can make me 20% and that 20% turns out to $500 a day and you can consistently do it, it doesn't matter what you see on Twitter with some guy making 1,000%, some dude making 700%. That's great for them. But we're talking about what's good for you, right? What's going to work out for you, right? So you need to have the right expectations, and your expectations should be just to be consistent. If you can just focus on being consistent, we can size up, right? If you got an 8 out of 10 win rate, but you're only making 20 to 30% per trade, you are a super solid trader and you can be a millionaire. All you got to do is add more money to the trade and stick to what's working with you. All right. Number 5 is obvious. never trade against the trend. You got a massive downtrend. Why are you trying to go long? Trade in the direction of the higher time frames, and there's multiple methods that you can incorporate to your current trading that involves the higher time frames that will keep you out of the way of the trend and in fact help you trade with the trend. I'm big into a good friend of mine, Rob. He just trades the strat. That's you can pretty much put that on any type of trading strategy you got, and that's going to enhance what you're doing, and it's going to keep you in the direction of the trend, in the direction of the time frames. Okay. Number 6, don't chase an extended stock. Now, for me in the beginning, I was the biggest win for this, right? Stock's up. It's the open. Oh, man, stock rip right out of open. And right at open, the stock's running. I'm sitting here getting ready to chase the damn stock. I'm right behind. I'm trying to get in right off the first 3 candles, right? If a stock starts to accelerate and you're not in on the initial break, or if you're 2 candles away from that trigger break, leave the stock alone. Let me say that again. If you're not in on the initial break of the breakout, or if you're 2 candles away, you need to leave the goddamn stock alone, okay? Because that thing is going to keep going, and by the time you buy, it's going to turn around, okay? It doesn't matter. So if you're in a Discord, it's very important. We can get in side notes about Discord conversations. I'm on number 6. We'll talk about number 7. But if you're in a Discord, a lot of times their leader comes out and says, hey, I'm buying ABC calls. I'm in at 25. Well, that means you have to scramble to get to that trade. That means you have to go into your platform, type in the ticker, look at the options, look at the chart. By that time, this guy's already been in it, and now the damn thing's up 20%. So we already talked about the power of 20%. So with that being said, never be in a position to trade stocks. And while we're talking about Discords, I know I'm going to go way off topic. I'm going to bounce right back to these rules, these 10 deadly sins. I think that most people's expectations of a Discord is way off, right? I'm going to tell you that because my expectations was way off. In the beginning, I was in 17 different Discords. I bought over 26 different trading platforms, meaning education things, because I was obsessed. When I made money trading, I was like, dude, I want to learn all this shit. I want to know it all, right? Because I can make a living here, right? So for me, buying all that, I had this expectation just to do well right off the rip because I was trading in apparently, quote unquote, the best Discords in the world. I'm not going to put nobody's name out there. I'm not going to throw anybody's under the bus. I don't do that type of thing. But my expectation was to become a millionaire in such a short period of time by just being inside of a Discord. Now, the way I think Discord should work and what your expectations is the content inside of these Discords. Because what you want to do is not be spoon-fed, but have the ability to fish on your own. Right? Because if you're following Discord alerts, yeah, you might take pieces of the profit, but your P&L will never be as great as the person calling those trades out because of alert lag. Now, I do a very good job of throwing a live stream out in my chat room. You can see my screen. You see when I hit buy. You see the order says plus 20, plus 100. You see my fill. I call it out. I do everything I can to tell you what's going to happen before it happens. But you have to use these Discords and that content to level your trading skills up so that you're at that level where you can just say, you know what? Here's my level. I'm going to go ahead and hit it. So never just rely on these Discords, right? These Discords are just a tool to better you. Each Discord that you're in should serve you in some certain way, okay? Until you get to the point where you don't need that anymore, then you're completely solo. And that's the purpose of a Discord, okay? Going back to my 10 deadly sins. Number 7, never short a momentum stock. I gave you an example. Don't short Tesla. Don't do it right now. I mean, yeah, it's extended on the chart, but it is not a bane. No technical analysis. It is legitly straight up with no red candles. Right, that's called a momentum stock. So when a stock catches this type of momentum, I was the guy back in the day that'd be like, all right, it's extended, it's oversold. I mean, it's overbought. So I'm going to go ahead and sell it. That was me back in the day. And of course, I got wrecked. And almost 8 out of 10 times I tried to do that, I got wrecked almost right off the rip, just trying to get short because something was quote unquote extended. So for me, when a stock actually is in momentum like this, I actually take them long. I take them in the direction as long as I have a pattern or a level break. Even though it's extended, it has the momentum, I'm going to have a tight stop, and I'm going to go ahead and ride those momentum stocks in that direction of that momentum because the momentum just disqualifies every technical analysis pattern out there. It just blows everything out in the water, and still to this day blows my mind. Okay. Number 8, marrying your trade ideas. All right. When you're wrong, you're wrong. That's it. There's no purpose of you being in a trade down 40% and saying I'm still right. If you're down 40% on a trade, you should be looking to get out of the trade. You should not be just staying in the trade and say, I'm going to buy more, hope, and hold on. Now, here's the thing. Sometimes that works, right? And when it works, it works. But when it doesn't work, it takes so much that when it did work, it didn't matter anymore because the losses took away those gains. So therefore, for me, it's not worth you sitting here trying to be wrong. When you're wrong, just get out of all your losing trades. Number 9, which is probably the most important thing, it's called boredom trading, right? The most important skill that any trader can learn, in my personal opinion, is the unique ability to be able to walk the hell away from the market, right? That's the hardest, most simplest thing that you can do is by being not in front of the trade of the market. When you're done, even if you're on my team, the minute I'm done trading, you hear me screaming on the audio, yo, who's green, who's red? As soon as I figure out who's green and who's red, I'm telling people to go home. Because the longer you stay behind the screen, especially when you're newer, the more you're going to want to trade. There's a lot of people who should be at a different level than where they're at. But this one thing right here, this one topic right here is the sole reason you don't have 7 figures in your trading account. Because you can't walk away from the market when it's so simple. Come to the market with the plan, trade that plan, and legitly walk away. And number 10 is the most obvious point of them all, which is going all in. You should be structuring your trades, right? Meaning if you have 25K, you should only be putting a certain portion into each trade, no matter how much conviction you have of that trade. It doesn't matter if you think this is going to be a 10 bagger, a 20 bagger, 30 bagger, whatever it may be. No matter how much conviction you have, you should be only putting a small amount into your trading, okay, into your trade. So for me, I don't risk more than 5 to 10% of my account. And it depends on what I have classified as phases, right? So when you're growing your small account, the way you trade in the beginning should not be the way you trade at the end, because it's about building. There's 2 parts to growing a small account. Part 1 is developing that small account to a certain size, whether you're starting with 25K, trying to build all the way to 100K, or rather you're at 100K trying to build to 250K. The point of the matter is you're trying to get your account to be at a certain level so that you can produce a certain amount of income. Because if I have 100K to trade with, I can easily make 5K a week because I have size and I can put my stuff in some weeklies. I can do that. But if I have 25K, it might be harder for me to generate 5K a week because of that size difference. So going all in just eliminates the chances of me just even trying to get there, because one trade will wipe you out. Now, I did that in the beginning. Like I was on a streak and I went all in every play. Like I was on like a 14-day win streak, and I really took my account from a small amount to a bigger amount, because 70% on the total value of your account is crazy. You get one trade, you're up 70%. Boom, you almost doubled your account in one trade. You do that for 2 weeks straight, your account's gonna be crazy. But guess what? It only took 3 losses that I went all in that significantly drew down my account. Okay, so that's my 10 deadly sins. But we're not going to stop there. We're going to keep going, and we're just going to keep going right into the psychology of things. And I want to just start by saying that the majority of us know how to win. The majority of people that are listening right now pretty much know every kind of setup. Like if I showed you a trading program right now and it had a bull flag, a wedge, and a double bottom, you would know these concepts. You would know these hammers, shooting stars. You would know triggers, support, resistance. These are things that are not new to most traders, but these are things that the most successful traders in the world say that they use constantly. But why is it that 95% of us fail? In theory, that means when you take a trade, every trade that you take, there's a 95% chance of you losing, but we still take these odds against us. Why is it that only 5% win? And that's mindset. We all know the same stuff. What's the difference between me and you is that I'm the driver of my account and you're the driver of your account. We all know what inside days are. We all know what outside days are. And before I keep going, we bought a new puppy, and you guys know about Bucky. Bucky doesn't like the new puppy, so you're gonna hear him barking quite a bit here in the background, time to time, because he's getting accustomed to this. But long story short, getting back into it, we all have the same setups. It's the driver of the car, right? Knowledge is power, but discipline's key. It doesn't really matter that you know how to win. It doesn't really matter that you know how to trade, or you know how to make $1 million. If you don't have the $1 million, that means you don't have the discipline to apply the knowledge to go ahead and do that. All right. And where that starts and where that stems from is because when everybody jumps into trading, their first couple seconds in trading, their objectives are completely flawed. So when I work with new traders, when they come to me and they're like, yo, X, I want to make 25K to 100K. That's great. But if that's your primary focus right off the rip, how can you achieve that goal if you're not profitable? It's a great goal to have 25 to 100K, but if you never experience any form of consistency, how you going to tell me you're going to do that following alerts? Because that won't be consistent. So what you need to do in the beginning is focus on number 1, progression, and number 2, consistency. If you can progressively get better 1% every day, and in theory, over the course of 3 to 4 months, you should be so much better than where you started that you should be somewhat, shape, or form profitable. And if not, you should keep pushing. I'll give you an example. In the beginning, I told you I bought a crap ton of Discords. I mean, I was in every Discord I could find, right? But I was so discouraged over the first 2 months because I wasn't profitable. Yeah, I made big trades, but I also incurred giant losses. But the thing I can tell you is over the course of 2 months, when I tell you when I first started, I barely know how to read a chart versus 2 months later, I knew what a chart was. I knew what support and resistance was. I could understand what traders were saying over the phone because I was getting better in that sense. I stopped caring about the result because I knew if I kept getting better, I would produce a result. And that phase, that learning curve phase, is crucial to a trader in the beginning because they always shoot themselves in the foot by number 1, either doing something crazy outside of a plan, or number 2, just being discouraged in general. And I urge you guys to keep it going. So in order for you to achieve success in trading, you have to understand what I call the 3 pillars of success. All right. So pillar number 1 is going to be consistency. Pillar number 2 is going to be risk management. And pillar number 3 is going to be a combination of mindset and discipline. And honestly, I was looking up the definition for mindset and discipline, and I couldn't really even find that. But consistency, there's no secret to this, right? If you can take one setup and just win on that setup, this is my breakthrough moment in trading. Because in the beginning, I used to trade everything, right? I told you I was a bunch of Discords. I was trying to figure out trading. YouTube was not what it was today as what it was back in 2011. It was way different. It was there, but it was just way different, right? So YouTube, books, and channels, and all these other things, right? So I was trading 5 different strategies at once, and that's why I was never fucking winning, because I was trading so many inconsistent things that just I couldn't line up that consistency. So what happened for me was, after I blew my second account, I went back through all my trades for the first time, and I was like, dude, every time I trade this bull flag in the first 30 minutes of the market, I make money. Sometimes I make 100%. Sometimes I make 200%. Sometimes I make 5%, right? But the majority of the time I take this one setup, I make fucking money. So therefore, I'm not going to trade anything else but these goddamn flags. And that's how it started. Because in theory, if you can take one setup, you can take one trade, you can generate the same result, right? And because you can generate the same result, you should have the same result over and over in theory, which is 100% win rate. So, but in real life, the market is the market, and therefore things are tricky. You have different variables. You got Federal Reserve, you got news, you have, liquidity issues, broker. It's just this stuff that happens in the real world that affects that 100% win rate. And this is where risk management's going to come in. We know we have a profitable strategy, right? We know from back testing these trades, that us taking these trades back to back and over again, that we can continuously push this account forward by doing this. But what happens when we're wrong, right? And this is where most people really mess up. They don't understand that it's okay to be wrong, but it's not okay to stay wrong. When you get into a trade and you know that you are wrong, you should have a risk tolerance to your trade, saying, I don't really want to lose no more than $500 or $400, $2,000, $5,000, whatever your tolerance is. When that tolerance is hit, you need to get out of the trade. And not just for obvious reasons, meaning, you're minimizing those losses. When you're minimizing those losses, you protect your gains. We know that. but the opportunity cost of you holding a bag is significant. I was in a trade, what was it, Thursday, and it was BABA, and I was down on the trade, right? And I was already up on the other 3 trades I took in previously, but I was in this BABA trade. In this BABA trade, I was just down. I wasn't down much. The trade wasn't moving. I think I was down about 7%, and it just was not going. But for some odd reason, I did not hit that trade. And guess what? When the trades that replanned out, Tesla above 945 hits the level while I'm in this losing trade, right? So by me holding this bag, I completely missed the opportunity to make up the loss from me holding this bag, plus a whole nother profit on the day. That's the problem when you hold a bag, because people are like, oh my God, I'm taking a loss. And that presents the fear of losing. Now, as a trader, you cannot have the fear of losing. That's like you being a boxer and walking into the ring and having the fear of getting punched in the face. You're going to get punched. Even Floyd Mayweather gets punched in the face hard, right? The point of the matter is you should be expected to take that hit, right? Meaning if you're getting in the trade, you should unequivocally know that if I'm wrong, I'm going to lose this amount. And I'm okay with losing that amount. If you're not okay with losing that amount, you should not be in the trade with that kind of size, right? So that's the biggest thing for most traders. Size the fuck down, right? Like a lot of us are sizing too much. I'm doing the 25K account challenge out of my room on a live stream in front of my team. I got this 25K account, started last Thursday. As of right now, I just hit 35. I've never risked more than $2,000 in a trade. Actually, I'm wrong. I did buy one Tesla contract that was in the money. It was $2,600. I did that last week. But besides that, pretty much my position size for a 25K account was $2,000. I know for a fact that that size, if it goes against me, I'm pretty much golden. I'm cool with the particular loss that I'm looking for, which would be $470. If I'm ever down $470 off my 2K, I'm completely getting out of the trade because that's what I'm willing to risk. And that's risk management. A lot of people don't have a risk management plan, and therefore it hinders your success. So breaking this down, pillar 1 is consistency. Pillar 2 is risk management. And pillar 3 is the most important, which is mindset. All right. Mindset is that thing that will keep you golden, right? But I've looked up the definition of mindset, and I'm going to do my best to describe it in my way possible. Mindset is nothing more than the next level of self-discipline that will allow you to follow your trading plan in any situation and eliminate emotions and help you remain to trading your completely systematic approach to the market, okay? So the thing about mindset, why is it there? The right mindset will allow you to walk away from a choppy market. That's the hardest part for any new trader. It'll allow you to take profit from the market and be satisfied with the profit that you take. It will prevent FOMO. It will prevent overtrading. It will put it into revenge trading. It will eliminate your emotions and eliminate trading drift, and it will make you follow your trading plan no matter what, right? So what mindset basically does is it lays out the results of your trading, and it makes you more result orientated towards your trading. And now when you have the proper mindset, it goes from I'm trying to make money trading versus I'm trying to execute this trade, and this is the result of my trade. So therefore, if I can repeat these results, I can grow my account over the span of years, right? So with that being said, mindset's pretty much everything. There's one book that I want to go ahead and recommend. It's 2 books, actually. If you read both these books, I promise you to change the way you completely look at the market. First one's going to be Mark Douglas, Trading in the Zone. The second one's going to be The Trading Playbook by Mike Bellafiore. If you read both of those books, read Trading in the Zone first and then the playbook, I promise you the way you look at the market, nobody can tell you anything ever again. But if you put all those three pillars of success together, you get what I call this perfect combo, which is consistently applying the same setup with great risk management and the discipline to walk away when it's not there will almost guarantee success in trading, because what you're doing is eliminating all of your emotions and you're eliminating everything just to experience the success in trading, which is consistency. All right. And that leads to the next part. The results of consistency are proven. If you take $200 a day, you make $50,000. I think it's $50,400. If you bump that up to $300 a day, that's $75,000 in the range. If you bump that up to $500 a day, that's around $126K. If you do $1,000 a day, that's $252,000 in a year. If you do $2,000 a day, That's $504,000 a year. Okay, so why are we worried about chasing? Why are we worried about not trading? I just laid out how to win for you. Why are we worried about Tilray's gapping up? You know damn well when they gap these stocks up 7-8%, they usually don't keep going, but you buying right here, right now, when you know you only need to make $500, $1,000, or $300 a day. And if you do that consistently, you can be absolutely profitable. You don't have to worry about anything. I'm telling you, if you can stick to a plan, you can pretty much achieve anything that you want to do. A plan plus patience. Now let's talk about patience. Now, patient goes beyond just waiting for your setups. Like there's patience in trading, and then there's patience with your account. Now, can you patiently wait for your setup? Like you have a trigger, you have an area where you're going to buy your stock. You come into the market with that particular area where you're going to buy your particular asset. You know that it's viable above this particular level. You told yourself that, but the stock gaps above that level or gaps way below that level, and you buy it early. That's the thing that stops people from being where you should be at, and that's called a break of discipline. Now, the other part of it is patience. Yeah, $200 a day is $50,000 a year. But can you wait a whole year of making $200 a day to make $50,000 in a year? A lot of us can't, right? So what happens is you become discouraged by the fact you only made $200 a day, or you only made $300 a day. So you just walk the fuck away, or you try to jump into 5 different trades. And what happens in the early part of the day is that you make money, but you end up giving it back because you're too impatient to go ahead and put those setups back. This is like, and I'm going to throw this at the top right here. Let me get this tweet. Let me show you this tweet. Right here, I'm throwing it at the top of this channel, right? So what you see in front of you, this is the sole reason why people don't succeed. For the audio purposes of everybody that's listening on the Audacity link, or if you're going to be listening to this recording at the top of this channel, if you guys watch Squid Games, I put the old guy there. He's at a panel. He has a decision to make. And on the left it says 30 minutes after trading open, he can hit a button that says, I'm going to call it a day. I'm going to walk away. I execute it. I've made money. I am done. Or he can hit the button to the right that says overtrade and lose profits, meaning he can continue to trade. Like, psychology is this. This is it. This is why people do not make it when they should make it. It is sad to see people blow up or see people walk away from the market or incur these major losses when they know how to win. And it's as simple as literally walking away. Now, what people really mess up at is they think that the majority of the money's made by actively participating in the market when it's not. The majority of the money's made in preparing for the market than executing on the market. Think of trading as a sport. I've said a tweet about this over the weekend. Professional NFL players, they go to 2 different practices a day. They go to the gym with physical rates, once a day to lift for bodybuilding, another time to lift to do active cardio, and then they spend hours in between that watching game film of themselves and studying their opponents. They do all of this to execute 1 hour of gameplay once a week. Just think about that. Like the amount of work that went in to play that 1 hour, where each player's average time on field is no more than 12 minutes. Average time on field. All right. So in order to get these 12 minutes in, these guys are putting in anywhere between 72 hours a week for work. Same things here for trading. I'm doing 300 to 400 charts a night. And I get that number because I look at one chart 5 different times. I'm looking at 5 different time frames. And I am planning out where I'm going to buy and where I'm going to sell based off my trading system. Now, my trading system is going to give me my plays for tomorrow. And I share a lot of these plays for free to help you guys grow directly on my Twitter feed. And all I ask for is just retweet it. And you guys have been doing good by retweeting my stuff. I've seen a lot of people make money on some of these plays and absolutely run it. And I'm happy for that. I'm happy I was able to help you. But the point of the matter is you should be preparing to execute tomorrow. Every day I open up a live stream, mainly for my team. There's times I throw it out on Twitter, but I go through the results of my trading system, right? This is what I did today. This is what I'm going to do tomorrow. Here are my top 5 plays. Now, tomorrow I have 5 plays. Here's where psychology comes in. You have 5 plays, and out of those 5 plays, you know for a fact at least 2 of them are going to rip. One of them is going to run and probably 2 are going to fail. Now your new job is to determine how that's going to work. Now, here's the thing. When you come to the market like that, there's only 5 things that can happen. I'm either going to take, or I'm either going to win some of these trades, I'm going to lose some of these trades, I'm either going to win all of them, I'm going to lose all of them, but all of my risk is calculated. When you come to a market without a plan, you run a risk of overtrading, you run a risk of jumping back and forth, you run the risk of just going all over the place. And that's why trading less is making more. Let me say that again. Trading less is making more. Like, the longer you guys are in the market, the more you expose yourself to the market, the more of a chance of a hit coming out of left field that will happen. The more you expose to the market, the greater the chance of you losing it is, right? So what you want to do is have this plan that's very strict. Like, when I get into a trade list, I have both a plan and an edge. They're not the same. A trading plan basically outlines what you're going to trade today. Like, here are my top 5 plays. The trading edge is something that says, here's a higher probability of his winning. So my trading plan is based off an edge of options flow and a combination of algo flow. And the combination of both of those, if you follow me, that's what I call dragon flow. And that's why I'm always like, this is green dragon, that's red dragon, because I'm looking for the flow to bounce my trigger to push my idea when it goes higher. Okay. So once it breaks. Okay. So if you put all that together, you have what we call a trading edge, and you never want to trade without an edge. Okay. And that's all trading is, man. It's literally, once you become profitable, because there's 2 parts of this. There's a profitable part and an unprofitable part. So in the beginning, a lot of times you're not really profitable. Well, what is profitable in trading? In my opinion, you're a profitable trader if you've been trading for at least bare minimum 6 months and you're green every month. It don't have to be green every day. You don't have to be green every week. But if you're green every month for 6 months, by bare minimum standards, you are a profitable trader. I at least want to see a year, right? But I give it 6 months. If you're not in that phase where you don't have that kind of confidence, you're unprofitable. So the way you approach trading should be a lot different. So this is what I recommend. So I've worked up a worksheet. If you're on my team, you can DM me. I call this 3 phases, the profitability, once you become profitable. So there's 3 phases of your account if you're trying to build your account. In the first phase, what we're doing, long story short, we're hitting the market. We're taking profit at a certain percent, and we're taking losses at a certain percent no matter what. So I'm trying to shoot for taking gains no matter what off my full size positions on my small account at 50%, and I'm cutting every loss at 15%. That way, I'm minimizing my losses until I get to a certain point. So let's just say from 25K to 30K. I call that phase 1. The idea behind that is to develop some type of cushion in the account so that when you get to phase 2, you can hold longer, right? So in phase 2, we are scaling out for the first time, right? So in phase 2, because we have a little bit of a cushion, what we're going to do is we're going to try to actually trade the plan to the fullest. Meaning, I have a trigger, I have a target, and I'm going to scale out at certain areas. I'm trying to take that trade from trigger to target. In phase 1, I'm just scaling out at positions to lock in profit. Now that I have profit in phase 2, we're going to go from trigger to target so that way we can generate bigger returns, and we're going to do our first scale at 25%. Now, phase 3, let's just say you take that account from $40,000 to $50,000. You're in phase 3. Now you have a lot of cushion in the account. Now you should feel comfortable. You should not be afraid of losing. You should know your risk. Now we're going from trigger to target. We're scaling out later. And on top of that, we're going to go ahead and increase our position size to our maximum position size, which is 10% of our account. So these little things like that will actually help you guys take it to another level. But besides that, this was going to conclude my first trading psychology webinar. So my next plan is coming up. We're going to go ahead and bang out 3 of these psychology webinars. Then we're going to move into Zoom seminars. I guess they call it a seminar if you can see my screen, right? That's the difference. I'm going to throw spaces up, and I'm going to put a Zoom link in the spaces. My team will be there. The next one is going to be on options flow. We're going to have another one here on triggers and targets, just to help you guys out because there's a lot of trigger trading going around on Twitter. But besides that, I'm going to head out. I just want to say I appreciate all of you guys for your support. Everybody, I know who's real and who's fake. And just want to thank you guys. Just say real talk. I really appreciate everything you guys do. But I'm going to go ahead and end it. If you guys have any questions, just hit my DM. Either me or my assistant will reach back out to you. Thank you again for your support, and I will see you guys in the next show. Be easy, everybody.
Thanks for tuning into this episode of Juicy Gems. Make sure to subscribe so you don't miss out on any future episodes. Also, visit juicytrades.org and join the trading community for live training videos, trade alters, or start training with the Learn, Grow, Profit Trader training program. That's juicytrades.org.